This is Jeb Blunt, and it's Money Monday on the Sales Gravy Podcast.
Say make money, money, make money, money, money. Make money, money, make money, money, money. Money makes the world go round. I'm the talk around town. Remy gave me the sound.
All right, it's Monday, but not just any Monday, because this is the Monday of the last full selling week of the year. So you got to make it count. This week, you got to get those deals in your pipeline that have been hanging out there closed. Because if you don't, and they push into next year, the probability is that they will never close. Now, one way to get deals closed right now, this week, and through the end of the year is by focusing your customers on why spending money now will help them reduce their tax bill while also making strategic investments in their company. In the United States, there are millions of small and medium-sized businesses, and the vast majority of these businesses are what we call pass-through organizations for tax purposes. This means that the owners or partners in these businesses report their profits on their personal tax filings. Now, unlike big companies, small companies don't have the luxury of rolling profits over to the next year. So whatever they make this year, they have to pay taxes on. So as the calendar winds down, founders and business owners are often motivated to invest in capital equipment, services, and software solutions in order to reduce their taxable income. And many will pay for the entire year all in one shot in order to get the money off their books because they want to avoid handing over a large chunk of their hard-earned profits to Uncle Sam come tax season. Now, to understand why this year-end closing strategy is so critical, it's important to get into the mindset of a small or medium-sized business owner. Unlike large enterprises with multiple departments and complex accounting strategies, small and medium-sized business owners are personally invested in the company's financial results because those results are essentially their income. It's how they pay their mortgage and put food on the table. For this reason, they watch their revenue and expenses closely. As the year comes to an end, they're looking at their bottom line and thinking about the upcoming tax bill. They're probably, just like I do, sitting down with their tax advisor and their tax attorney, trying to figure out how they can reduce that tax bill. Now, for many business owners, including me, profit is a double-edged sword. Now, don't get me wrong, we want to make profit, but at some point, too much profit triggers a much higher tax bill. If there's one thing I know about small and medium-sized business owners, it's that they hate paying taxes, and they're always looking for ways to legally minimize their tax liability. One easy and productive way to do this is to make investments that they can either expense or fully depreciate before December 31st. This often means buying new equipment or purchasing software or buying training packages or even services that will not only improve their business long-term, but also reduce taxable income for the current year. Now, as a salesperson, the key takeaway here is that your prospects have a natural, time-bound incentive to spend money right now. And if you can position your product or service as the right investment at the right time, you might find it easier to close deals in the final weeks of the year and even motivate prospects to accelerate spending that they had planned for next year. And if you're dealing with decision makers who are pushing off decisions into next year, this is a great way to get past that objection. I want to be clear, though, that most businesses, including mine, are not going to go spend money for the sake of spending money. Savvy business owners want to reduce their taxes and do the right thing for their company. Therefore, you can't be transactional. You can't just call them up and say, I can save you on taxes. You've got to follow your sales process. You've got to build a bridge to value, and you've got to help the business see the improvement they can get out of spending the money now when you make your business case. It's about framing your product or service as a strategic investment rather than a mere expense. And when you can tie the ROI of your product to both tangible improvements and the financial perks of year-end spending, the business case becomes much more compelling and you'll sell more and close more. It's also important to understand that while the end-of-year tax incentive is a common denominator, not every business is identical. Some might be profitable but cash constrained, while others may have capital burning a hole in their pockets. Some may be in sectors that had a booming year, while others are recovering from a difficult market. The more you understand the unique challenges and goals of each of your prospects, the better you can tailor your approach. So before you pick up the phone, walk through their door, or send an email, do some research. Check out their recent announcements, whether they're hiring or expanding, and look into the trends in their industry. Understanding these nuances will help you fine-tune your messaging. For example, if you know that a business is tight on cash, you can focus on flexible payment plans or financing options. And if the business is flush with profit and cash, you can reinforce the immediate tax advantage and the strategic value of using that cash to reinvest into the business. The key here is empathy, being able to see things from their perspective, and relevance, making sure that your message is compelling and meaningful to them. You've got to show that you understand their position and that your solution aligns perfectly with their goals. That personal touch combined with the natural urgency of year-end is a powerful recipe for closing the deal. I don't want to sweep under the rug how important timing and urgency are with this tactic. While you don't want to be completely transactional, you do want to be direct. With only 3 weeks remaining in the year, most business owners have a long to-do list. They're busy. They have limited time to spend on sales pitches. This means that your outreach needs to be respectful of their schedule and also clear, direct, and compelling. Say right away, I'm calling before the year ends because I have a solution that can help you maximize your tax benefits this year and help you grow your business next year. Being direct and to the point respects their time and it sets the context immediately. You should also be aware that many business owners are completely overwhelmed this time of year and don't know where to even start with spending money to reduce their tax burden. Approach these conversations as a relaxed, confident consultant who is there to help them. It's crucial that you create and maintain a sense of urgency. Not the aggressive, pushy kind, but a natural urgency rooted in a real calendar event, the year end. The fact is that the clock is ticking, and if they don't make their purchase before December 31st, they will miss out on the tax advantages. This deadline is not artificial. It's not something you made up. It is reality. It's the tax man's reality. Use this to frame your conversations because urgency helps your prospects prioritize your offer over the other distractions on their busy schedule. I'll wrap up with my final thoughts in just a moment, but before I do, if you are looking for some last-minute holiday and Christmas gift ideas, you can't go wrong with my new book, The LinkedIn Edge, that you can pick up on Amazon, or the brand new and completely awesome Jeb Blount Ultimate Sales Success box set that you can get on Amazon or at Walmart. These are great gifts for the sales pros and leaders in your life. Okay, let's finish up with a review. Here are the 5 keys to selling more to business owners at the end of the year. First, business owners have a natural incentive to invest more at the end of the year because they want to reduce their taxable income and set themselves up for a strong next year. Next, you want to frame whatever you're selling as a strategic investment. Highlight the value, the ROI, and the tax benefits that come with a year-end purchase. Avoid being transactional. Follow the sales process and position yourself as a consultant and partner who can help them navigate this critical period. And tailor your approach to each business owner's situation. Research their needs and adjust your message accordingly. Show empathy and demonstrate relevance. And finally, create urgency. The calendar is your ally. Focus on the benefits that come from acting before December 31st. But here's the deal. You got to get moving on this today. The low-hanging fruit is out there. It's ready to pick, but it will rot on the vine if you fail to pick it before the sands run out on the hourglass of this year. And remember this week at the end of each day, when you're ready to give up, when you're ready to go home, when you're ready for the holiday to start, will yourself to make one more call. I'll see you next time on the Sales Gravy Podcast.
Survival of the fittest, you can sink or swim. I've been broke, I ain't never going back again. I need some C notes, some cheddar, and a stack of ends. I need a bowl of dough, I don't need no Facebook friends. I need a pack of them snaps, a handful of Fetty Wops, and rubber band on my greenbacks. Look, dawg, don't be playing with my paper. I need every red cent, that's why I brought my little scraper. Money, 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 money.